watching Master Trader Live, simple market analysis and education to help you make money in the markets. Join us live each week on YouTube and see past episodes at Master Trader Live. And now your show hosts, Greg Capra and Dan Gibby.
Welcome, everybody. Welcome back for those that join us every week on Wednesdays. Today might be one of the most important MT Lives that you've ever attended, because these candles, well, there's really, I wouldn't say anything magical about them. The implications of these candles are ones that typically do not fail. And I think they display institutional involvement with or without increased volume, which would be great if that accompanies it. But over the years, I've seen many stocks and markets go up or down without increasing volume, which is theoretically what's needed to sustain a trend. I would beg to differ just based on historical observations over the last 30 years or so. And while there's no assurances, guarantees, right? We're not here to guarantee anything. The probability of prices following through in the direction implied by these candlesticks is extremely high. Now, one candlestick by itself isn't a strategy. It does nothing. So we have to take different concepts or pieces of information and put them together into strategies or what's called a trading plan, as to what should I do? Should I buy? Should I sell? Should I do nothing? And so as we put together these candlesticks with support, resistance, trends, voids, relative strength and weakness, money management, position management, everything that we put together for our thought building lessons, we have a plan as to what we're going to do, and then how we're going to follow it. And then probably your biggest hurdle will be following what you've put together for yourself, that your research has installed a strong belief that it works. And as crazy as that sounds, it's the real reason why, it's said that 80-90% of this is psychological. And I don't know if that is an accurate number, but I do know that human nature isn't aligned with what we do here. That's a whole nother MT Live conversation. So let's get into the candles, and there's good stuff. And if you have questions, let's do it.
Awesome. So welcome, everybody. Yeah, so Greg mentioned indirectly this page already, which is, we're going to be talking about this. We're pattern-based traders. No setup, no action. Give me a pattern, and then we overlay these other concepts that make up our approach. So part of today is going to be focused on these big bars, form the candlestick analysis bar by bar of, is it a compelling setup or not, based on these powerful bars that we're going to be showing you. And then we say, okay, we have an igniting bar, we have an ending bar, we have a big old bottoming tail, downside reversal. Where is that in the trend? What do multiple time frames say? Did this downside shakeout happen on support? Is it showing relative strength or weakness, volume, moving average analysis? And what are the broader markets doing? If the markets are in an igniting swing situation, we push the throttle more on these setups, and we're more suspect when the markets are nearing a turning point, because even our compelling patterns have a higher probability of failing. So I've told Greg we could spend the entire MT Live on this one slide right here. We could define what a candlestick is, red and green, big bars, putting them together. So, I don't have every concept here, obviously, because you don't see multiple time frame, there's a lot missing here. But just take a minute right now. Do any, I should have included in here, do any big bar, do any big bars, change that. Jump out at you. And if so, do any big bars set up a high probability trading setup is the second question. But we trade technicals, which every single bar, whatever time frame you are on, it represents the open, the close, and the high and the low of that bar. That's what a candlestick is. If it closes above the opening price, the software paints it green. We say the bulls are in control if it closes with a green real body. And then we're put at this candle language concept. It's an arrangement of candles that is telling us who's in control. And that's really what we're doing here is we don't trade fundamentals. We trade because the only thing that makes stocks or anything move is an imbalance of supply and demand. When demand is greater, you're going to see trending environments, the reverse on selling. So, I don't want to belabor this chart, but we could actually come back to this in 30 minutes. And based on what you've learned, some things should jump out at you as being salivating setups. We're also going to use today's subject as warnings. If you're in a position, I'll just give you a quick example. This green bar right here highly suggested higher prices. Took out the high 180 reversal, bar by bar analysis, danger if you're on the long side there. If you want to put a short position, well, that's a different question. So here's just showing you a big bar versus a little bar. And you say, well, how do I measure that? And I say, I'm talking to little Johnny. It's going to be what jumps out at you, little Johnny. A big bar is going to be a big fat, a wide range bar as we define it, is a big fat green bar with little tails. Big compared to what? Compared to all the others. They're going to jump out at you. I just showed it to you on this thing. Where's big bars? A bottoming tail big bar is still a big bar. But the formation from the open, from the low to the high was different than this one. This one, the bar opened up here and it was solid buy until the close of that bar. This one opened here. The sellers were in control, but the battle's not over yet in this bar. Brings it back up, closes it green. So the bulls won this bar, the bulls won this bar, but this one was just created different. And we'll show you many examples and what to do with this.
What I'm pointing out here, I love drawing, Dan, with this platform. So besides them just being big bars compared to the little bars, think about what created those big bars. Meaning, I put the X down at the bottom and the heart up at the top. So there was a tremendous amount of buying. It started lower and it went higher. And you say, yeah, I can see that, Greg. That's not revolutionary. Well, there's so many simple things that are ignored when it comes to trading because of the indicator-based methodology and people thinking it has to be complicated. It doesn't. It was lower and it went up, and it went up a lot. And, as Dan pointed out, that was the open down here, and up there and it went all the way down. It came all the way back again. So something positive happened, and it took a lot of money. I assume, we assume, depending on stock. But it took a lot of demand to take it down there and move it all the way back up there. Whereas we look at this one there, and it's like, okay, it was lower and it went higher, but that wasn't impressive. Hammer would be better. I don't know. Hammer, tail. Marcelo, we don't think about names.
No, Greg, I think
mean,
he's asking, we just said these are both power bars. He's saying, do you have a preference in the identical pattern of which one of these are better? That's what he's
no. No. They're both big bars. They went lower and they went higher. What I would add to that would say, well, what could make this one better? Well, it could potentially, could have opened at the same place the prior bars closed. However, rather than doing that, if it opened, let's say the other bar was here and it gapped down, which would be bearish, maybe it gapped down slightly under the prior bar, and it came all the way back again. So as we look at examples, every bar, each bars could be different in how they look, but how they reacted to the prior bars is a key piece of information. So that little nuance says, hey, you know what? It's still a bullish bar. It's a big green bar. I love it. But if it gapped down, it would kind of add to the power of the move to come back from that bearish event.
Yeah, and secondly, it's beyond today's conversation, but the 15-minute chart is going to look much different. So we, particularly as day traders, there could be a significant difference. All right, I want to get to examples. So this is let's just do this one quicker. Big old power bar. These are just showing signs of slowing momentum. When Greg turns over to the actual charts, as we always do around 12:45, we've been saying that the Qs and spiders, all-time highs, power up trends, the daily, hourly chart, but they're slowing momentum because the size of the bars are smaller than the igniting breakout that we have.
Well, in addition to that, Dan, and everybody, you might say, well, look at that. You just told me about these big bars, and we looked at ones that had big tails on the bottom and the top. We talked about the bottom ones, but this is an additional concept adding to the big tail bar, the big bar, in that you'd have to put these bars in the context of a trend, support, and resistance, of course, but that's a small candle body. That's a small candle body. That's a small candle body. That's a small range and a small candle body. So remember, as I said, these are thought building lessons, and that's what they're called in the course, because we're not indicator based traders. We're not system based traders in a sense. We have a method, but it's not a system that you would say, just plug in the system and let the monkey press the button, or your computer. Whereas we're building these thoughts as to, hey, that's a big power bar. That's a big bar, and sellers took control. But it's a small candle body. So when you think about candlestick names, like this might be called an inverted hammer if it was going down, 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 down. So the momentum slowed. Whereas if it was going up, it could be called, I don't remember the names exactly, but they might call it a shooting star. I don't know. They have these fancy names. I just look at it as a big bar that was rejected as prices went up and came back down again. But the upside momentum slowed. The former that I explained, the downside momentum slowed.
And one last comment, momentum slowing doesn't mean take action. It just means recognizing the meaning of it in connection with the overall pattern. whether you're in the trade bar by bar analysis of saying, okay, what's this information telling me in terms of managing my open position, or you're looking, to do a new trade. So that's all. I'm not going to talk about this, but what do, again, I should have changed this to big bars. So what all these arrows, just take 10 seconds and look at them. So this is now the first example, other than the candlestick intro slide, that you can now start putting together these bars and tails range expansion in connection with the pattern, and is there an actionable event, whether you're putting on a new trade or in a trade. Okay, because we just don't have the time, or we could talk about every one of these arrows, and that would be today's session. So it's kind of like a little pre-test, if you will, but there's a lot of information on every one of these arrows. So we don't trade arrows, we don't trade 1 bars. As I said, as Greg said, we're trading patterns. So, somebody asked, hey, which bar do you like better? Well, here's a wide range bar, breakdown failure. So this would have the identical meaning if it was just a big bottoming tail, when we were talking about those 2 differences. But any big bar that we're trading, we don't trade the bar. So those bars have to be in connection with a tradable pattern. And those bars can happen on any one of these pictures. We obviously trade more than just these 9, but you get the point.
What I'm marking here on these is that when we're talking about the big bars, we've also said that we have to put that big bar in alignment with the past. And so as we look at candlestick patterns, and again, we need to discuss trend, support, resistance, voids, blah, blah, blah. But as you look at all of these, right, they say bullish money patterns on all time frames. Well, as you change time frames, the pictures change, but they were going down either on 1 bar or several bars, and then they reversed. So when you see, in this case, forgetting about trend, and you see 3 big red bars in a row, think about the thought that produces. Oh, that's negative, that's bearish. If you see a consolidation, it breaks down, and if a red bar, that produces a thought, oh, it's likely going to go lower. Again, support, resistance, trend, so on and so forth. Even if the trend suggested it would go lower, and you saw this, it's like, wow, that's something. What happened there? And so as you see these big bars and look at what preceded it, it's an immediate shift in the previous thought. And that's one of the things that I think we all find difficult on some level, is that, especially if you're an intraday trader, is that things can change so rapidly, and human nature doesn't like that. It likes to be secure and feel safe. And so there are other things, especially money management, that keeps you safe. And as you put together support, resistance, trends, and so on, and you recognize these abrupt, sometimes very abrupt changes, they present tremendous opportunities.
All right, so we're going to go through as many examples as possible, and many of these I'll focus on 1 trade, but let's kind of take a step back here and apply a little bit of what we've learned already. So this was a big, fat, strong bar. Gapped up, came in. Okay, I'm holding. And so now when it trades under the low of it, we say that that's a wide range bar ignored. That's a bearish signal. But again, throughout every one of our MT lives, you need to differentiate the message of what we're saying the candle is displaying versus tradable events. I don't have a tradable event right here. I mean, here I could start thinking short, but let's continue here. It said, I'm looking for big bars. This red bar suggested lower prices. It was negated by 2 big green bars. Now it's just a messy consolidation. What about this bar? A gap breakout from a big bottoming pattern. Greg, is this an actionable event?
Yeah.
Absolutely. So this would have been on our gap list. Buy a 5-minute high, stop prior day's low. Big bottoming pattern. Okay, so now this is a closed trade, and it shows the history, the date, the symbol, the stock or option trade, and we always give the technical setup. So this is a buy setup and a bullish reversal and a bullish 1, 2, 3 on the weekly. So I'm not showing it, but the weekly had this big bullish wide range bar, but we're using the daily to get on board. And so this other slide that Greg talked about, the 9 patterns, this is a bullish 3-bar turn after an explosive move up. That's our entry.
That's the key right there to this. Have any of you ever seen this pattern and seen it fail? I know we're looking at charts from the past, but have you ever seen a pullback pattern fail that looks similar to these bars coming down? Like, it's a common thing, 3 to 5 bars down, stabilization out of 20, green bar. I've seen plenty of them do this, but I haven't seen plenty of them do this when it was preceded by the explosive move. And that's a key thing. This is something I'll be talking about. I'm going to be doing a presentation, I think the end of next week. I forget my date. I can find out. I'm going to give you the link. You can sign up for that. I think you're going to enjoy it. Go ahead, Dan. Let me find the link.
Yeah. All right. So here, Greg said a moment ago that 1 bar can start changing the way you're thinking. So this, whatever this is, we don't even care about the symbol. This could be, Apple or Bitcoin or a bag of rocks. Nasty, nasty power downtrend. Gapped lower on earnings. We were watching that actually to short it. We never did, particularly because the weekly was so extended to the downside. And then this is how it closed. Multiple time frame analysis. We're trading the daily, but we go up 1 time frame just to make sure that the bias of that chart is in alignment. So the bias of this is a bullish retest of a climactic buy setup, and it went sideways for a month. 4 weekly bars. So
I'm marking off here, Dan, is that when it was asked before as to which one might be better,
right?
Well, this is an example of what I was talking about, in that green bar on the daily, I think the daily chart, gapped lower. It went down and it came all the way back up again. That's powerful, because that implies institutional buying on the drop. Correct. And you can see the volume. And on the weekly chart, it broke the lows. That was a big, nasty red bar, and turned into a big bottoming tail bar. That's powerful. Granted, it's in a downtrend. It's going to take time, but this is how bottoms begin, where institutions are accumulating on the dips. And then once they can't accumulate on the dips and the trend begins to change, that's when, hey, I can't buy it so cheap, the dips, and now they have to start taking the offer, and that's where prices start to move up bar by bar, multiple bars in a row. Like right here, they just keep slamming the bid. They're not like offering out, trying to get out at a better price. They're like, no, I just want out of this piece of junk. I have to hit the bid because that's where the demand is. And then this kind of got climactic.
So this would be on our long watch the next day. And, we're swing traders. So, even if I get $5 out of this, 5, 10, whatever, there's we haven't talked about the concept of a void, but every one of our patterns, if we're going long, it has to have insignificant resistance to the left that we think it has room to move into the void towards its target, where we have a nice reward to risk trade. That's all. That's trading. That's all it is.
That's an excellent point, Dan, in that on that pattern, say, you see this pattern as we're talking about here, and we've explained the implications of that pattern. Now, the other parts of what we talk about, support, resistance, trend, and so on, multiple time frames, is that you see this pattern. MT Live, they said institutional sponsorship, they're buying. So, but this pattern is one in which it's going to take time to absorb that supply. I mean, that's kind of far away, but what I want to communicate here to you is you're going to need patience. And what this will do at times, because this is what these kind of patterns do, is that they move up nicely, sometimes aggressively. And because of that supply and the trend that it needs to transition, right? I typed in before, this green line is the 50 MA, your intermediate term trend. The red one is way up here, covered by some of that. So long-term trend, this thing's been going down for a while. It's going to take time for all of those institutions and individuals that want to get their money back, or until this begins to develop further. So while this is a very powerful pattern, don't think it's going to explode like something in an uptrend. But it's great for credit spreads and it's great for short-term swing trades, but don't fall in love with it yet.
Yeah. All right. So, there's so many things we could talk about, but I want to move on. So here's the trade we gave. This is, remember the slide with 9 setups on it? This is what's called a bullish 1, 2, 3 continuation breakout. It's a wide range bar with little or no tails. Got it. It's an inside bar that stays in the upper third. Got it. Price void. Look to the left. Look over here. There's nothing over here. No resistance. Got it. We just put on another number 4 here when we have 2 inside bars that trade under, particularly when they stay in the upper 50% of this. It's fabulous. And then it had a small gap breakout the next day. Bought the stock, wide range breakout at the 20 MA. Should have been called the 1, 2, 3, 4, actually. Well, there you have it. We just go into trade management mode, $770. We're swing traders.
I typed that in there as a money bar because in some of my presentations, I would show exactly that setup. 1, 2, 3. And usually you hear us talk about 1, 2, 3 patterns. 1, 2, 3, 4 is that bottoming tail bar has to take out the prior bar's low and then come back up toward the high of the range. They rarely fail. So now we've got a big bar, right? This big wide range bullish bar. It consolidates, and then all of a sudden, sellers hit it and knock it all back down again. And then the institutions come in, they buy the dip and they drive it right back up. Very powerful setup.
Yeah. All right, what concept are we going to show you here? We call it a two tail, but today we're focusing on big bars, right? These two just happen to be big bars with tails on them. This in and of itself is what we call a climactic buy setup. Okay. So you could buy over the high of that, stop under the low, but we prefer double bottoms, some type of retest. This is one flavor of the retest. And what, Greg and I salivate over these. What makes this better is it took out the prior low. And then here's we call it a range expansion bar. What does range expansion mean? Well, range is from the low to the high, right? So it means that the range got bigger relative to the prior ones. Little Johnny understands this. So I have a range expansion engulfing close, taken out prior stops, and we call that a new low plus, and I have a price void because of the momentum move down. So this XLU, so this one's an ETF. Bought the ETF, wide range bar, retest reversal of a climactic buy setup. 4-day swing trade, there. We're out, took our money, off to the next trade. Same, but different. This range expansion wasn't as big, but look, I'm calling this an income trade. An income trade is where we just say that's a compelling reversal. I don't think it's going below there, and we sell a bulk of either naked puts or a credit spread, or on the high side, like right here, for example, this is a breakout failure. And now here's a breakdown. We'd be selling a bear call credit spread, but yeah, let's focus on this one here. So go ahead, Greg, you're good with this.
Yeah. So this is, super simple concept. And what the weekly options trader does, and as the advisory one does one a little bit longer term, but what it's looking for is like, here we have this pattern, as Dan explained. And so now we have a situation that implies that prices, it's in a downtrend. It implies it's going to go up. How far is it going to go up? Sometimes they surprise you. A lot of times they'll tag the 20 MA with a pattern like that. But this credit spread idea is, okay, I see this pattern. I don't think it's going to go down. It could go sideways. I don't care as long as it doesn't go down. And so 115, I kind of eyeballed it. Let's say 115, usually what we do is we look under the reversal bar. 115, you go ahead and you sell that option and you buy the cheaper one, and the difference is the 50 cents, what was marked there. That's
right.
That's your 50 cents.
So 10 lot, $500 comes into your account.
Yeah. Right. And you don't get to keep the $500 until, well, if this goes up, let's say we would have done that probably after on this day.
Correct.
Yeah, would have done it on that day. So time to expiration, and it's always pointed out, I'm looking here, blah, 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 the date, 10/20, I don't know when this, so it was probably, that was this week or next week.
Correct.
Well, you got to wait to the expiration. But if this begins to accelerate, this 50 cents could be a dime quickly. And so we might take the money. We don't have to wait till the end.
That's what we did. Bid 10 cents to close. We met our target.
Right. So all of these are updated to you virtually in real time through text messaging.
Yeah, we're just showing you many different flavors, and we could spend 20 minutes on every chart. I mean, here's a breakout failure. Big bar. Big bar. Big bar. Aha. Here's red bar ignored. It did not follow through after trading under it. Does that mean buy it? No. Give me a pattern and go through our other concepts. I mean,
Pointing out here what we talked about before, the explosive move and the pullback, that bottoming tail bar that went down, it was opened here, it opened there, it actually gapped up, it went back down and then right back up again. So this bar by bar analysis concept is very powerful. Yeah. And as you put that together with those individual bars and the other concepts, you come together for very high probability patterns. So, we're focusing on these bottoming tail bars in here, was explained, and it's, a breakout, but, this was another desirable pattern. It was trending down, the green line, the 50 MA is pointing down. In addition, it's lined up with this resistance area. And this, what catches our eye when we see something going sideways, that's one concept. It doesn't tell you to do anything. But when I see it going sideways and it's at resistance, this is a concept in the swing course that's called absorbing supply. Sometimes a simpler term is bullish price action. We know that there's resistance there. You can see the bottoming tail bars, right? Which means they're buying the dip. This is why we call it candle language. If you understand the pictures, you know what they're communicating to you, and it's not just calling it a bottoming tail bar or a harami or whatever you want to call it. It means that there's strong demand lurking below, and then they're driving it back up again. And sometimes that takes a while. And in between those bottoming tail bars, sometimes there's red bars. And when we see the red bars being ignored, it should be getting ready to pop.
And in this case, we waited for the closing breakout, and we bought over the high the next day. So wide range breakout of a bottoming pattern at the 20/50 MA.
So many lessons.
All right. So what are the messages of these inside? Well, I'm talking here. Let me start back here. So, broke down. I have lower pivot highs, lower pivot lows. I have flat 50, declining 20. Okay, I got a mess on my hands. But let's look at the message of the bars and then where my action point is. Big bar suggested a bounce. Didn't go anywhere, got slammed back down. Topping tail, resistance, still no pattern. It's range bound. It's range bound in a short-term downtrend. Now I have a gap and wide range lower. We could have shorted under that low, target, this gap fill right over here at the 200. But what do these additional two bars tell us? They were big green bars at the day's high. And remember our slide describing tails, they got sold into. So now we have three bearish inside bars now. That was our entry. So we shorted the stock here. And I just called this one a breakdown, didn't give much detail. So breakdown, two-day target, 200 period moving average corresponded with this gap fill off to the next trade. Big bar, but there's no trade right here. It gapped up, bottoming tail. I mean, does everybody remember tug of war when you were in high school or your corporate events at your first job? Think of candles as tug of war. So here's the beginning of the game, the open. Team A, the Bears, dragged it right back down here. Team B said, hey, we still got 45 seconds on the clock. Come on, guys. Had a pep talk and dwarfed Team A. So that is a big bullish range expansion bar, but it's at resistance. There's no action item. Gapped up to resistance. Nothing to do. Red bar, suggested lower prices, 180 reversal, closing breakout. Now I have a tradable event. Our green room, Greg and I get requests every other day for private coaching, and we used to offer it. But we'd charge $750 an hour, and yes, of course, we help hundreds of people. This green room is so friggin' cheap. And we start at 9 a.m. We trade. It's like watching us, interacting with us, learning, trading, scanning throughout the day. Slow over the lunch period. So we have a $7 trial. We spend an entire week with us, not just a day. So I highly recommend that for folks.
But Alex, Dan, go back to that slide for a second. Thank you, Alex. He's with us. Alex is in the room every day, shares his trades. I've known Alex for 20 plus years, 1994 or 5. And pleasure having met and still know.
Awesome. All right, so we're kind of running out of time here. This is a shock bar. Downtrend. The bears are going home, high-fiving at the happy hour that they're short this thing. The next day it gaps over both red bars. Closing breakout. Remember Greg talked about you have to have the discipline and knowledge and patience to change your bias even in one bar. You better believe this one bar better change your bias. Then we get a bunch of inside bars. We buy over the high, another 1, 2, 3 type of pattern. What made this one great? It's down a lot. So it's not a great, I'd say this one's more advanced, but green bar ignored. So that's a breakout failure. Closing breakdown. Look at all these tails. Every bar is closing with a tail. Closed right at the low, nothing to the left. That's our entry.
That's a no-brainer.
It is to you and me and people who understand your course, but I could see somebody saying, why are you shorting something from 138 to 129 is down a lot already? And I just answered it.
What you explained there, and then
Right.
all the converging moving averages coming together, which moving averages are subjective. You can pick whatever ones you want, but the alignment of them communicates that there had to be a consolidation to the left because all the moving averages came together and you're averaging out those prices so they converge. And then this bar right here was a big green bar actually as it went up into that area, and the big money came in and crushed it back down again. So as we put together this information with this information and this information, you're putting together a high probability trading setup.
Yeah, and the void, of course. All right, the intraday, 15-minute chart. That's what we call a late day breakdown. It's down a lot. Yes, I see that. Tail, tail, tail. No support. afternoon breakdown. Just a sell setup here. Closing breakdown, downtrend. Yeah, we're done here. This is actually the trade that we showed you earlier. And I said it was on my long list, and I did this on purpose. Put it down here after you've learned a little bit. So look, a bear gap on earnings, closing with a bullish engulfing breakout from a bottoming pattern at the 20. Okay, it's amount. Well, I see more, but we already talked about it. So we bought it, quick little swing trade. We made almost $5 and take our money and go to the next trade.
So Dan, let me point out there, I mean, so many things to consider and talk about. What I want to provide to you is that in the letters, whatever the letter is, you're not just being told, do X, Y, Z. No, you're told with a chart, you'd be provided the chart, you're provided this explanation so that, assuming you've taken the course or you spend whatever amount of time getting familiar with everything that we do, it's reinforced on a day-to-day basis. So here's the chart. You've learned how to read these charts, right? Based on our method. And then it's reinforced through the new chart as well as what's printed out here. So you understand why you're doing something, not just being told what to do like an idiot.
Right. So we're going to switch over now. Greg will show his charts, but I'm just showing you this because today's subject, Greg has so many amazing scans that find these. And a scan doesn't mean hit the button. A scan means bring me something that matches this, and then it's our job to see if we have a high probability setup. I think Greg posted his swing trading course, mastertrader.com/swing trading. Whether you're new to trading, 20 years trading, this is an amazing course, and it's also the foundation of our option trading since it's technically based. So this is a must-have for any person wanting to master technical analysis. All right, Greg will pull up the charts. Bumblebee, Greg asked to look at Abbott. And that was actually on my list the other day over the weekend scanning Bumblebee. And I actually put it in a note to subscribers saying, wide range engulfing on support, we will monitor it for entry. We did not give a trade idea. We just said, hey, we're going to monitor it. So,
by the way, if you're interested in the course, on that checkout, there are some incredible deals for the green room, the money management course, and the directional options course. Anyway, so Dan, here's this chart I told you today. Don't worry about the 50 MA.
And you were right.
And I was right. And look at it now. That bar is like huge. I think, and still inching lower.
Biggest one on the screen.
Yeah, exactly. That's it. This was your trade this morning in the green room as a short, working out very nicely.
And it was on our pre-market discussion list as a gap watch, right?
It had this nice, here was a gap down and it consolidated. And again, this isn't a big bar, but it cleared this high and got slammed back down again. So then when it gapped down here, it just tells us it's weak. All right. It's continued weakness. It doesn't tell us it's going to be this gigantic bar right there. You just don't know which trade is going to, be a huge winner in the moment, or which one might force you to sit with this thing for a few days, or if you're a day trader, for a half hour before things start to move. So,
and if you were just for day trading purposes, folks, you don't have to do it, but if you would look at the 15-minute chart, it's a day trader's dream because it is just stair stepping with no buying. It's a dream. We covered 1/3 the position on that first green bar at 91.25, just a third. And look at this. This is a dream management for day traders. It's
Institutions are dumping this
yeah.
for whatever reason. I don't know if there's news, but look, you can see the volume down here and the way it's going down. It's coming into some support down here. We'll see what it does. ABT, what's with this mess?
Well, I put in the weekend letter this green bar on support. I did not give a trade. I said we will monitor this for a possible trade. So the very next day, when it had a deep retracement, we have zero interest in it anymore. But secondly, Bumblebee first asked, hey, this had a wide range bar. Why is it not working? So Bumblebee, just to reinforce, a bar is just a bar. It's not a pattern. And then we need the void, multiple time frames, support, resistance, trend, those other things. And number two, they happen all the time. Of a bar can be ignored, and that actually sets up for us, like that's called a bear 180, a big green bar followed by a big red bar. Does that mean short it? No, not unless I have a void, trend, etc. So
this stock, it's been going, clearly it's been going down for a while. So, it appears that it's bottoming. My famous saying, bottoming patterns are treacherous. But this was a huge bar. Obviously, that was a huge bar. And it didn't form a 1, 2, 3 or a 1, 2, 3, 4. It didn't form, we haven't covered bear sandwiches, but that's a 3-bar reversal. In any event, this still could be bottoming. And so what I'm thinking when I see this kind of price action is it on support? And it's not. So whether there was news or institutions are early accumulating, one thing to remember and realize is that we have our method of doing things. But there's a lot of different ways of investing or trading and ways that are totally unknown to us. So when I look at this chart, I look at this and I say, there's no support here. Why would anybody be buying this? Well, I don't know. It doesn't make sense to me, but somebody's buying it. Now, that's why you have to be so open-minded, even when you learn a method, is that things are going to happen that don't make sense. What do you do in a situation like that? You take these two hands and you stick them under your butt and you sit on your hands. You don't do anything until it makes sense. So as this is bottoming out here, I would think you start thinking about credit spreads. You start thinking it's bottoming. Maybe it'll get going, but it's not jumping out as a no-brainer. That's for sure.
yeah, it was on my put spread list, but it never set up.
All right. What else can we look at? So on this slide, this isn't the big scan slide here, but what I use for part of what I use for a top-down approach, I use this slide here. Again, you got all the different indices and different ETFs that are linked to a minder. This has scans in it. So we have scans that you can put scans in a minder like this, or you can just have scans that just show me wide range bars. So here, as I go through these and I see, well, what's doing well on a today, what's doing poorly on a day, and you can see the NASDAQ composite is doing well, the NASDAQ 100 is doing well, and it loads these here. So now if I want to say, okay, show me within that market the ones that have a wide range bullish bar. And this little green dot tells me that it's above yesterday's close and today's open. So that's doing well. So now that puts me in the ballpark. Now, will this continue to do well? I have to think, yeah. That was a red bar yesterday and it's turning around.
Right, that's great.
It looks like it'll keep going up. It's a new all-time highs. Of course, it's a semiconductor. That's what's in favor today. Here's one that pulled back. Honeywell, totally different stock. Turn around. Looks like if it closes like this, it should go up. Electronic Arts. Well, we missed the boat on that one, but that would have been in a scan on this day.
Mhm.
So again, this is how we can look at these. Here's a bearish 1, 2, 3. Again, it's not a wide range bar because it doesn't have a green check mark. It's surprising there aren't more wide range bars today, but that another example of the narrow breadth. If we look at, okay, in the S&P 500, here's an energy stock. It's a utility. We were looking at utilities in the room yesterday, bottoming action. So it doesn't have a void, but it certainly looks like it's going to go higher. Again, the day's not over. This one is not it. Oh, that's nice.
Yeah.
Yeah, bottoming action, wide range bar. The day's not done. It's almost 1 o'clock. At 4 o'clock, that could be a big topping tail bar. So that's another lesson, is that it's a trap. Like, money management is so key here, is that, look, you don't know if that bar is done. If it's after 3, the probability of it closing like this, give or take, are very high. At 1 o'clock, you just don't know. But it's definitely one that you want to go and throw in a watch list. I'm going to flag that. It's going to go into a watch list. And so we'll come back to this at the end of the day. Throw it in a thumbnail, see what it's going to do tomorrow. But that would be in the wide range bar scan. Another one going up, wide range bar breaking out, another semiconductor. I would love to see this have a 1, 2, 3 kind of a pattern. It's at resistance, but look, it's already been chopping around at resistance for a while, and now it's moving up. It looks like it should go higher. Flag it. Building materials. So these have been getting killed for a while, even with interest rates coming down. This could be good for a put spread. It's not a directional. Earl wants to look at CCJ. There's a wide range bar. There you go. It's marked CCJ, marked in the wide range bar. It's been a grinder coming down. So this is igniting a move, again, assuming it's going to close this way. It's in a weekly uptrend. A mineral stock. I don't know what kind of mineral this is, whether it could be aluminum, it could be copper, COPX, copper stocks. They're bottoming there. Uranium. Okay. Or you could, what's uranium? URN? What's the uranium ETF? Looked at it yesterday. There we go, URA. There you go. So you can pick an individual stock. You could pick an ETF. Let's see if this thing closes well, Dan. So URA, there's your uranium. Bottoming out on the 200 MA. HOTR. Hydrogen. Not ready yet. I saw it over the weekend down here. It's just not ready yet. Hydrogen. They're making big machinery running on hydrogen now, even some cars. We'll see if that ever becomes to fruition. But you can see this is, again, the top-down approach, which is doing well today. And semiconductors, and you can sort this by daily, weekly. Look, oil, not oil, gold continues to do well. Inflation fears, fear of the market. Semiconductors still doing great. Regional banks improving. That's a positive. It's a lot of earnings reports. And one of the things that you can do here, again, we share these with subscribers, these layouts. There's no additional cost once you become a subscriber. But so I know earnings are going to be coming out, and it's right here. Not only is it in the chart, I'm excited it's not there because I have it scrunched up, but this is not earnings because of the it's an index. But here you can see when the earnings date is and when it is, and you can click this and sort it by here. And now you start seeing, okay, this one's going to report earnings on the 12th, the end of the week. This one's going to be next week. So you always want to be aware of when these are going to report earnings, because you don't want to be blindsided by that. So there's tremendous amount of information shared in this MT Live, more so in the courses, in the green room. And if you use this platform, once you become a member, this is a tremendous amount of work to put these things together and these scans. So there's a huge advantage for becoming a member. So we hope that you do. And we'll be back next week with another great MT Live. If you loved it, share it, and we'll talk soon.
Thank you for listening to Master Trader Live. If you liked the show, we invite you to share this video on your timeline or tag a friend who wants to learn stock market tips. Stay educated with our free chart of the week, a weekly analysis or lesson sent right to your inbox. We're live every week, and you can subscribe to the channel and press the bell to get alerts. If you've enjoyed the event, please give us a thumbs up. Just visit mastertrader.com. That's mastertrader.com.